YouTube, back with another video. So today we'll be talking about CPI. As you guys have seen that last week on the 14th of November, CPI went crazy. Hopefully you guys traded it well. But today's video, I'm just gonna get into depth about how you guys would have caught it. But then one trick about CPI now, you should check how NFP played out, because usually what I've realized that the past few months, I'm not saying this will happen every single time, but the past few months, what I've seen is that the results of NFP will repeat during CPI. So if NFP buys, CPI will buy as well. So that's what happens this November. So the first thing that we're going to look at is NAS100, right? So you guys can see that we had a nice bullish flag right there. That's what we are going to focus on in the 1 hour time frame. So one thing I say in most of my videos is that you should keep in mind of the impulse and the followed correction, because the correction will tell you whether it's going to continue or it's going to reverse. So you really need to pay attention on how that correction forms and how the structure looks. So since you guys know that we have two types of corrections, the first one usually is the continuation correction, which is going to happen, and its formation is going to be relatively horizontal or flat, right? So if the price is coming from the bottom and then we have a nice correction right there, we are most likely to continue to the upside. And then the second type of correction that we'll have is the one that is regarded as a reversal correction. So this one is not flat when it comes to the structure. It's more vertical, or vertical basically. So you draw your trend lines right there. So if it's coming from the bottom going up, the price will probably reverse to the downside, opposite direction. It's gonna go back where it's coming from. So that is key. Let's look at what NASDAQ gave us. So you can see around these areas right there, we had a nice vertical correction. I mean horizontal, because you can see it's more flat than it is vertical, right? And it's happening right after a nice impulse. Let me just highlight the area that I'm talking about. So this is the formation that we are discussing right now, right? You can see that it happened right after an impulse. And what does that tell you? When the impulse forms and it completes, obviously the market has to correct, and in this case it corrected to continue to the upside. So let me just erase everything. Okay, so obviously, let me just erase this as well. So we're gonna scale down to the 30-minute time frame. So this is what we had in the 30-minute time frame, this structure formation right there. And what you do, obviously, you get your trendline tool and spot your resistance as well as the support. But in a case of a buy, we focus on the support, and then in a case of a sell, you focus on the resistance, because you want to buy at the very bottom and you want to sell at the very top, right? Yeah, so when it comes to our structures, we need 3 touches, right? Third touch has the highest probability, so that's what we're gonna bet our trades on, the third touch, because we have so much probability when it comes to the third touch. So in regard to this structure, this was our first touch on our support, second touch on our support, and then this one was regarded as the third one. So I'm just gonna highlight it so you can see we have a nice 1, 2, 3 touch on our support. And what we'd like to see on the third touch is a bit of confluence, right? So confluence just basically means having more than one reason to, execute your trade based off your decisions. So the first reason we'd want to see in order for us to take this buy is we want to see the price reject on our third touch. So obviously you would need to spot out things like the wicks and reversals as well, reversal candlesticks, which I'm sure you guys are aware of. If you're not, you can just quickly Google reversal candlesticks on the internet. You'll see everything. So we're still in the 30-minute time frame. And what do we have here? So the lowest point is this point right here, this week. That's what we will consider as our rejection. So that's basically our first confluence regarding the third touch, right? First confluence, cool. So if we scale down to the 15-minute time frame to get more details, we can do that as well. But we can't really scale down all the way to the smallest time frames if our structure is so big, because now those candlesticks won't tell us the exact story, right? So you need to correlate your time frame as well as the size of the structure. Okay, cool. But in this case, we can still work with the 15-minute time frame, which is not bad. We still have our rejection right there. So what we need to see after the rejection is, in the case of a buy, you'd want to see bullish candlesticks, preferably 2 bullish candlesticks in a row. And that's what we got right after this nice rejection. So we had 2 bullish candlesticks, which shows us momentum, because momentum is very important. You can't just execute right just from the rejection alone. You need to see whether the price is changing in momentum. So we did get our 2 bullish candlesticks in a row. So what that means is now we have enough confidence to execute our trade when the third bullish candlestick opens. So at the opening of the third candlestick, which is this one, and when it comes to our stop loss, right, we put it below the lowest point of our third touch, which is our rejection. So we'll put it below our rejection, not at the same level as the rejection, but below it. Because usually if you put it at the same level, the market can go back to that point for an example, to retest the support, forming what we call a double bottom, right? And in this case, we did have a double bottom, but the fact that we set our stop loss below it, the market didn't reach, or it didn't take out our stop loss. So that is where we put our stop loss, and then we scale up all the way, right? And this was prior to the news event. Right before the news event, the price bought a little bit, and then it went back to our entry point, past our entry point, and the price was basically chasing our stop loss. But since we put our stop loss at a perfect area below all the market movement, it turned right before it reached our stop losses, right? So you shouldn't panic. What you should take from this market structure of the price just going up and then going back down to your entry points is that now we have another form of Confluence, which is a double bottom. And as you know, double bottom means you are buying. So this is just more reasons for you to either hold your positions or add more positions. So with that said, say you do have a big account, you can risk, you would have entered again right after the rejections and 2 bullish candlesticks. So you would have 2 positions in this case. Okay, let me just maximize my screen. And then you still put your stop loss, same area as the previous stop loss, same risk, and then you just scale up. So you guys can see this huge price movement. So this was during CPI. This was the actual CPI news event. So for those who don't know how to do research on these fundamentals, in most cases, you don't really need to know how to forecast and predict where the news are going to go. All you have to do is just spot a nice structure that you're familiar with and very comfortable with, and then put your stop loss. And in most cases, the price will respect your setup, and the news will go your way, even if you didn't really analyze the news, right? Because as you can see, when I zoom into this, this was, let me just go to the NASDAQ one. Hold on. So you can see the price really shot up, right? So this is where we're analyzing the price shot up, gave us a nice impulse, followed by a nice correction right there. And this was the actual news event. As you can see, that's a very long wick, so we're just gonna get back to that. So same thing with the structure, you can just figure out your resistance right there. But in a case of a buy, the resistance is not as important as the, what do you call this, the support. So you can see with this one, the levels of the support are not actually making sense. So with this one, you can just ignore the support itself and just try to use a an inverse head and shoulder pattern to catch this one. As you can see, the price gave you a nice inverse head and shoulder pattern right there. Nothing very complicated. So when it comes to price action or the falcon strategy, whatever you want to call it, you guys should use all the tools that you have, implement all the tools that you have on your trading view, because if one tool doesn't work out, for an example, in this case, we couldn't just draw a simple trend line highlighting our support. Instead, we resorted to the inverse head and shoulder tool, right? So it's still the same concept. The third touch always has the highest probability. And how many touches does a head and shoulder pattern have? You have the left shoulder, which is regarded as the first touch, the head shoulder, second touch, and then the right shoulder is the third touch with the highest probability. So it's very quite simple. And if you wanted to go in depth to basically verify the, what do you call this, the third touch, you guys can see from this point right here, we had just a brief impulse, right? Right after that impulse, we had a nice correction. The price was just going sideways. So what does that tell you? An correction prior to an impulse just means, you know, the price is just going to continue going up. And since we already know the results of NFP that happened 2 weeks before, what do you call this, CPI, the price bought during NFP. So now we are hoping the price buys during CPI. So we already had some kind of idea of the market direction. We just needed setups that, you know, aligned with that kind of market movement. So you grab your trendline tool right there and spot out your support. Since we are buying, we're going to focus only on the support. So you can see, counting the number of touches on our support, we have 3 touches, which will always be the case, right? If it's a nice clear structure. So let me just get my arrows. Back from the ad break. As I was saying, you can see this small correction has 3 touches. First touch right there, second touch right here, and we have our nice third touch right there. So the same thing happens right after your rejection. You spot out 2 bullish candlesticks, and then you enter your buy right there. But mostly when you trade fundamentals, it's advisable to use a pending order so that you don't leave any room for human errors. So that's how you would have got the news without analyzing the fundamentals itself. So that's how you would have got this nice, huge market movement, right? So same thing with US30. So you can see it's very similar to what NAS100 did. You had this this nice correction right there, right after this huge impulse from the downside. So you can see if I zoom out, and then sorry, hold on. So we had a bigger structure. Sorry, it's advisable to look at the structure in the bigger time frame, because you can see now it just looks very choppy. So if you want to get rid of the noise, you just scale up to the 30-minute time frame from the 15-minute time frame, and you try to count the number of touches. Let me just erase everything and then go back to a 30-minute time frame. So you can see that if we adjust our trend line, we have 3 touches on our support. 1, 2, 3. You buy right there. It's literally the exact same structure as the previous one that we're looking at. But when it comes to CPI, this is the CPI movement. How would you have caught it without knowing the news? Is this nice flat. Remember, the correction is flat. It means you're going to continue. But then if it's more vertical, it probably means the price is going to reverse. So this one was very flat. So we can use this block right there, even for the resistance, but the resistance is not important. So we're just going to do it for illustration purposes. And what we have here is the market basically doing this. First touch, market went back up, giving us this touch as our second touch. Market went back up, and now we have this nice third touch right there. So using the arrows, first touch is right there, second touch is right there, and the third one. Third one has the highest probability. So let me just erase this. So if we zoom in, so since it's fundamentals, we would have just put a pending order on this zone for a buy. So the market reaches it, triggers our pending order, and now you're in the trade. You already set your take profit way up there. So when it comes to the take profit, you just use the previous high, which is either this one as your first one to be safe, and this one was the major one. So you can see the price reached both levels during the CPI release date. So that is basically how you would have caught it without having the hassle to check how, the economy itself performed, watching news and everything. Just a simple structure, simple price action, a structure, impulse correction, and third touch being your highest probability. That's where you set either your pending order. But I know, like, South African brokers, you can't really execute during the release date. So it's best to just set like a pending order. But then if you're using maybe international brokers that are rather lenient when it comes to trading fundamentals, you could have just manually executed this one by just hitting your entries right there. So it's basically the same as the previous one, the NAS100. So it's not really that complicated trading fundamentals, especially CPI. I personally believe like CPI moves more than NFP, and NFP happens before CPI. So what you should do is write down what you observe during NFP. If the price is buying, write that down so you don't forget. And then when CPI comes, all you have to do is just basically take the results from NFP, apply it to your focus on CPI. So in this case, NFP bought. Now we had some kind of direction of where the news are gonna go, which was a buy. And then with that information alone, all you have to do is you just draw your setup. Because if we scale up to maybe the 2-hour time frame, 3-hour time frame, you can see that we had this nice support at the very low, double bottom right there, and we had this huge structure. And same thing happens in the smaller time frames and the bigger time frames. So you can see we had 1, 2, 3 touches. Third touch had our highest probability. It went up. So let me just draw it here. It went up, giving us an correction around these levels, which is this level right there, and it continued going up. So it's literally very simple. You shouldn't overcomplicate it, because now you would be prompt to make mistakes that you don't want to make mistakes, bro. I swear, during fundamentals, one mistake, your account is gone. It's literally gone, unless if you're taking measures by putting your stop losses. So that is it for today's video. It was just a recap of what happened during CPI and how you could have caught it, for you guys to be prepared for the next news release, whether it's Jan, Feb, just for a future reference. So I hope this helped you guys. Thank you guys for watching this video. Till the next one.